As we move on now to the grain markets, there was optimism on Monday as we began the trading week, but there was plenty of data released that might have weakened it. According to the latest Consumer Price Index, inflation rose 6.4% over the past 12 months. There have been plenty of other factors influencing the commodity markets, including the South American crop and U.S. export inspections. This week, we caught up with Luke Beckman from Central Valley Ag to get his thoughts on all of it. Well, there's been a lot of news to process. I mentioned the CPI data that came out this week in our introduction here, but I wanted to begin our conversation with you talking about the latest when it comes to the Mexican decree when it comes to genetically modified corn. They came out to kind of double down, I guess, on their initial intention with that. What can you share with us when it comes to the latest with that and its potential impact on the corn market?
Well, the U.S. administration had wanted some answers by this week. This was a date that they had set where they wanted more information from the Mexican government about the science behind their decree, and really just reinforced a lot of what the industry had been discussing, in that this really feels like a non-GMO ban, really for the food products channel. Corn that's going into the food supply. Primarily, that's going to be like a white corn type product going into, tortillas and chips and those types of things. And so they did reinforce that, basically stating that, corn going into the food supply needs to be non-GMO. But they did walk back really the GMO ban on feed as well as industrial use corns going into those channels in Mexico. And so I think this thing's going to continue to evolve, but at least some good news there that genetically modified grain does have an outlet in Mexico if it does want to trade there. Now, keep in mind, Mexico does produce a fair amount of their own corn that's going to go into those feed channels as well.
Yeah, an interesting topic there. We'll keep a close eye on that as that story continues to develop. Luke, let's begin here, staying on the corn theme and talk about South America. I mentioned to you before we got going here, I was hopeful you could kind of share an education lesson with us about what's the most important things to be watching down in South America right now. When it comes to corn, what are your thoughts?
Well, when you want to talk about corn on the South American side of things, it really starts with soybeans. And so right now, soybean harvest is rolling across much of Brazil, kind of starts in the north and works its way to the south, kind of the opposite of what we're accustomed to here in the States. But as they harvest that soybean crop, you've got planters coming in right behind that, and they're planting their second crop corn, or their safrinha crop. And so it's really important that they get the soybeans harvested in a timely fashion so that they can get that second crop corn planted. They generally want to do that by the end of February, and that really puts their corn crop on track before they get into a really dry stretch as they get closer to their winter. If you get that corn crop planted much beyond February, it really puts the crop at risk of running out of moisture late in the reproductive and grain fill stages. And so it has been a little bit wet in Brazil. It's hampered a little bit of their harvest progress, but they've caught up pretty well here in the last week or so. And so no major concerns yet, but it's a story we'll want to watch here over the next few weeks to make sure that that safrinha crop does get in the ground. That certainly ties into the U.S. export market as it relates to corn. That's been absolutely abysmal this year. We're down 35% year over year on corn shipments out of the United States. And so as that safrinha corn crop goes, so goes the Brazilian corn export program. And so if we run into issues with safrinha corn production in Brazil, it generally opens up U.S. corn exports. As it stands today, we're going to need a little bit of help in terms of U.S. corn exports.
Yeah, Luke, let's kind of continue on that theme of where we're headed with this conversation on the soybean side of things. How are exports looking on that front?
Really, on soybeans out of the United States, we've really been pleased. Export inspections had another good week. Over 50 million bushels shipped outside of the United States. That's above really where we've expected to be. And so as you look at Chinese export sales that are still on the books, that means we've sold the beans. We just haven't shipped them yet. A little over 2 million tons of sales that need to be executed yet. I think that's the big question with this market, is whether or not we're going to make good on those sales. And if you have a big Brazilian crop, which we do, it might be expected that China is going to take Brazilian origins on those beans rather than U.S. And so I think that's in the back of this market's mind, is, are we going to see export cancellations for U.S. beans and potentially actually roll some of these old crop sales into new crop 2023? But so far, exports on old crop beans have really been a bright spot. And as you look at old crop soybeans on the chart, we continue this uptrend that we've been in really since harvest.
All right, Luke, well, let's wrap up here. Nice weather over the past couple of weeks means lots of grain being moved. What final piece of advice or risk management thoughts do you have to leave us with?
If you have old crop grain on farm, one thing that's new that we've talked a lot about this year has been cost of carry. You have an opportunity cost that's higher this year with high dollar commodities and higher interest rates. So think about that. If you have grain on farm, corn that's $7.25 today is the same thing as $7.50 corn this summer. Keep that in mind as you think about cash flow and overall what you need to offset the cost of interest.